Lesson 3: Functions of a Stock Market. A stock exchange primarily serves the following purposes: transparency in securities transactions. The stock exchange must ensure that all interested market participants have timely access to data for all buy and sell orders, therefore aiding in the fair and transparent pricing of securities based on supply and demand regulations. Furthermore, it should effectively match related purchase and sell orders. For example, 3 buyers may have placed orders to purchase Microsoft shares at $100, $105, and $110, while 4 sellers may be prepared to sell Microsoft shares for $110, $112, $115, and $120. The exchange, through automated trading systems, must verify that the best purchase and best sell are matched, which in this example is $110 for the given amount of trade. Price discovery that is effective. Stock markets require an effective system for price discovery, which refers to the act of determining the correct price of an asset and is typically achieved by examining market supply and demand, as well as other factors and transactions. Assume a software business situated in the United States has a market value of $5 billion and a share price of $100. The European Union (EU) authority has levied a $2 billion punishment on the corporation, which effectively implies that 40% of the company's worth may be wiped out, according to press reports. While the stock market may have set a trading price range of $90 to $110 on the company's share price, it should adjust the allowed trading price limit effectively to compensate for anticipated changes in the share price. Otherwise, shareholders may struggle to trade at a reasonable price. Maintaining liquidity. While the number of buyers and sellers for a certain financial instrument is out of control for the stock market, it must ensure that everybody who is qualified and ready to trade has immediate access to submit orders that should be fulfilled at a fair price. Transaction security and validity. While additional players are crucial for a market's smooth operation, the same market must guarantee that all participants are verified and continue to comply with the appropriate rules and regulations, providing no room for either of the parties to default. It should also ensure that all associated enterprises operating in the market respect the regulations and behave within the regulatory framework. Support all market participants who are eligible. Market makers, investors, traders, speculators, and hedgers are among the players in a marketplace. In the stock market, each of these parties has different roles and tasks. For example, an investor may buy stocks and keep them for several years, but a trader may enter and quit a position in seconds. A market maker offers critical liquidity in the market, whereas a hedger may prefer to trade in derivatives to reduce the risk associated with investments. The stock market should guarantee that all such players may work effortlessly, performing their expected duties in order for the market to continue to function properly. Investor defense. Along with affluent and institutional investors, the stock market also serves a huge number of small investors for their tiny investments. These investors may lack financial knowledge and be ignorant of the hazards connected with investing in stocks and other publicly traded instruments. The stock exchange must put in place the appropriate safeguards to prevent such investors from financial loss and to maintain consumer trust. A stock exchange, for example, may divide equities into different sectors based on their risk profiles and allow restricted or no trade by ordinary investors in high-risk stocks. Exchanges typically impose limitations to deter those with little income and knowledge from engaging in risky derivatives trading. Regulation that is balanced. Listed companies are extensively regulated, and their transactions are monitored by market authorities such as the SEC. Furthermore, exchanges impose certain standards, such as prompt submission of quarterly financial reports and immediate notification of any pertinent events, to ensure that all market players are aware of business activities. Failure to comply with the rules may result in the exchanges suspending trade, as well as other disciplinary measures.